We are here on the very first episode of the Building Equity Podcast. I could not be more excited because I am sitting down with the legendary John Bowens. John, thank you so much for kind of embarking on this journey of the Building Equity Podcast with me. How are you?
I am awesome, James. Excited to be here. Really excited to jump in the content and the material for today. And I am equally excited about the Building Equity series. We have a ton of great real estate professionals that are going to be on with us. We're going to get into that in just a few moments. I do want to mention to all of our subscribers and viewers out there, in terms of the passion and excitement that we're going to bring to this program, we are bringing real estate investor professionals on the show with us. So what I'll tell you, James, is years ago, I found that there was a gap, and still to this day, there's a gap in educational content for real estate investors, especially for those that are just trying to get started.
100% agree.
And so I'm excited for this show. Before I go any further, James, why don't you tell our viewers and subscribers a little bit about, what is building equity and what was your vision? When you came to me and said, James, I want you to be a part of the show, you gave me a very specific mission statement and you gave me very specific objectives. And I think that'd be really important to kind of frame this series up for all of our viewers.
I love the fact too, when I asked you to do it, you were like, hey, I'm willing to do it for if we do XYZ, meaning we have real professionals on the show that are really involved in the real estate space, that can really offer substantive, actionable steps for real estate investors. And what we're going for here is if you haven't made your first real estate investment yet, we're the show for you to watch. And if you've done 3 deals and you're trying to get the 10 deals, we're the show for you to watch. And you've spent your career working in the IRA space, you're a real estate investor. I've spent the last 10 years of my career in title insurance. I will say that I'm very competent when it comes to real property data. I'm very competent in what exactly a title examiner will look at to identify on a property what we like to call kind of the ghosts and goblins that could be there. But when you're investing in real estate, you got to act quick and you're going to make a deal on a bank-owned property, you want to make sure that there's not some crazy $1,000 lien or unrecorded property debt that you don't know about. I'm pretty good at that stuff. And what I noticed with real estate investing content that's out there in the world, it seems like everything is get rich quick, become a billionaire, start doing deals with no money, don't even own a home to live in and just go be rich. And it doesn't really work that way. Real people, it's a marathon. You can play the game smart. You can play it conservatively. You don't get rich quick, right? And what I wanted to be able to do is say, okay, I know with my background in title insurance, and I know with your background in retirement investing, retirement planning, IRAs, you and I could come together and we can sit down with some real estate professionals and we can help a real estate investor that's either watching this or listening to this at the gym. And they're like, okay, I want to take the first step, but I don't know what to do. Or I've done a couple things, but maybe I'm not doing it right. I'm not quite sure. I don't know what entity to form to be able to do this the right way. We're the show to watch. And I care so much about it because this is what we do every single day. We're not what I like to call a paper champion. We are literally at these conferences, at these real estate investment groups. I am all over the country at nearly every single real estate conference like a nerd listening. And I'm listening to the earnings calls from the builders, from the real estate prop tech companies. This is something that we are beyond passionate about. And we have the ability to kind of find the information. And I think one of the skills that I possess is I know how to translate it into a way that kind of a regular person can understand, take actionable steps, and we can go from there. So that's a long-winded answer.
No, thank you, James, for framing that up for everybody. And I obviously share that passion. Now, my background as a real estate investor, landlord, I also do quite a bit of private lending with my self-directed IRAs and outside of my IRAs. And yes, I focus a lot on self-directed retirement plans as the head of education with Equity Trust Company. That being said, what I understand is that as a real estate investor, you have to make sure that you're taking care of both your taxable environment and your, call it non-taxable environment, your self-directed retirement plan. And I think it's really important for subscribers to understand that this series is not just all about self-directed retirement plans. It's about, and we will have segments, of course, on self-directed retirement plans. And that's, my area of expertise. It's what I'm incredibly passionate about. I use my Roth IRA to buy properties, to make loans. I've helped thousands of investors to do that. But we want to make sure that folks understand holistically, if you want to begin investing in real estate, here are the real world applications. And I'm glad that you mentioned, James, kind of the beginner to intermediate investor. And so for somebody that's never bought a property before, here are the, as you call it, James, the ghosts and goblins that could be lurking in the shadows. Here are the pitfalls. Here are all the lessons that I've learned over the years and that other investors that are going to be coming on this show can teach you about. And I know that there are some segments coming up, and I don't want to get too ahead of ourselves here in terms of our future segments, but we have licensed real estate attorneys and estate attorneys that are going to be coming on, CPAs, people that work in the real estate practice that understand the bookkeeping, the record keeping, the tax applications of the real estate business.
The number one problem that at least I've heard from folks that are trying to sell a property or buy a property, and specifically with investing, and if they're doing it without a professional, how do I value the property? Like what are valuations and how do I value it correctly? So the market right now is on fire. It's a seller's market. We're recording this. It's February of 2022. As of right now, it's a seller's market. There's no inventory, right? And if you're trying to do this yourself, right, one of the biggest mistakes people do is they maybe overvalue or undervalue a property. We want to literally bring a Florida real estate property appraiser, a licensed property appraiser on the show, sit down, grill him with questions. What is he doing when he values properties that maybe some of these investors can learn from, right?
Yeah, one of the things I'll say, James, and give everybody a little sneak peek of that episode that's going to be coming up with Dustin, is when we interviewed Dustin, what we learned is he's not just a real estate property appraiser, he's also an active real estate investor. And what he told us was he just a couple weeks ago bought 4 tax deeds. He bought 4 properties. Tax
deed sales, and they're in the mobile home game.
So there's investments out there, right?
I love the fact too here. We'll talk about when we go into kind of the next segment with the news. There's always investments out there, right?
Right. There's always investments out there. I go to the real estate investor clubs all across the country, but I'm from Cleveland, Ohio. So, James, I focus on that area. And I go to the real estate club meetings, and there are investors actively buying properties. Now, I will tell you that I do run into some folks that say, well, there's no deals out there. And so therefore, I'm not going to take action with starting investing in real estate. And so I usually ask them, I say, well, how many offers have you made in the last couple of weeks? Usually they say 0. I say, okay, well, how many properties have you looked at? Usually they say 0. I say, how many times have you taken another investor out to lunch to pick their brain and network with them? Usually the answer is 0. What it is they're not taking action. And so I'm excited to talk about how folks can take action. And it doesn't mean you have to be working in real estate for hundreds of hours. I work full-time with Equity Trust, teaching investors all throughout the country. And then I run our real estate business part-time. My wife and I run a real estate business part-time on the side. So there are ways to be a part-time real estate investor without having to quit your job. And I'm glad you brought, kind of the hype and what we see on TV and house flipping and what, some other podcasts are about, go quit your job.
It doesn't seem realistic to me.
Exactly.
Yeah.
We're here to talk about, especially for those that are just getting started, or maybe they're, I've bought a few properties and they're looking to try to scale their business to then eventually maybe quit their job, which is okay. We're going to talk about, how to be a part-time investor, how to be able to manage your day effectively, how to find properties, how to value properties, how to figure out how to create an offer that makes sense, right? How we can add value to properties. Dustin's going to be talking a lot about that. How we can shelter our assets, how we can deploy the right asset protection strategy. And then as you talk about building equity, what really excites me the most about building equity and kind of your vision and philosophy when you came to me, James, and this is, I think, very important for our subscribers to understand, is it's not just about the building aspect of it. It's also about the preservation aspect of it. And that's what actually gets me the most excited, because when I talk about retirement plans, Roth IRAs, and I'm sure we'll share lots of stories and real world applications, that gives us the ability to be able to leave a legacy to our family.
That's what we're here for, right?
You know, I'll talk about a couple, Kevin and Cynthia, and they have over $1 million in properties and cash flow. And when I asked them, what are you planning on doing with those Roth IRAs, with all of these properties in these accounts?
Yep.
They said, we don't plan on using any of it. We want to leave it to our children or leave it to our grandchildren. And I know some folks might not be thinking that long term, and they're just focusing on the short term, which is okay. But we still want to make sure that we have our sights on what do we want to do with our money? What type of lifestyle do we want long term? And how do we get there? And I think that's what building equity is all about. And that's what excites me the most about the program.
Let me ask you this question. I don't want you to answer the question. I just want to kind of set the table for it. But you are intimately involved with kind of, let's say, investors or folks that want to become investors, that when you talked about actionable steps and they make the decision to say, I'm ready to do this. And then they do. My career, I've successfully closed thousands of transactions, right? For, people are buying and selling homes, and we've successfully closed those deals in a title company, right? By the time it gets to me, they're already under contract. So my question for you, and I want you to think and marinate on it a little bit, is what do you see as that driver? Because I imagine folks are really nervous. They've been able to save 60 grand and they have it in an IRA, or they don't. But they're ready to kind of open the door and say, all right, I'm ready to become a real estate investor now. Like, what is it that clicks for them? Or what is it, I get they're nervous. And I imagine a lot of our subscribers are trying to figure out, how do I take the first step? And you see so many literally take the first step. And when I see them, I'm there to almost kind of catch them and hold their hand and make them feel comfortable, but they just got to me. Do you know what I mean?
Right.
So I want you to answer that question.
And I'll say, James, quickly, I'm not going to go into the details just yet, but I'll share with folks, some of my first investments and some of the lessons that I've learned. We were having dinner last night, and I was telling you, some of the war stories, so to speak.
Sure.
Now, we've had a lot of great investments, and we have had some that have not gone so well.
Yep.
And we have the opportunity on this show to talk about that, because I think folks will get even more value out of those stories, the stories of where you had to learn lessons the hard way. Because the reality is right, wouldn't folks rather learn lessons from someone that's learned the lessons the hard way, like myself and
Sure.
other investors that I've talked to, so they don't make those same mistakes?
So here's what I say in the title office behind the scenes to my team. Mistakes in our business are thousands of dollars. Every single time, if there's a mistake, if a title team misses a mistake and there was a lien, or there was a judgment, or there was something that we didn't disclose that buyer should have known about, or it's always thousands of dollars, right? Mm-hmm. And to be able to proactively give somebody just a little bit of a heads up and say, just look over here, or you may want to ask this question, could save you thousands of dollars. And that's not an exaggeration. It's just the nature of the work that we're in. When these properties are hundreds of thousands of dollars, it could be millions of dollars, it could be ever. That's what happens. But before you answer the question,
news.
We're going to go to news.
We got to do news.
We have segments on this show, the Building Equity Podcast, John, and I love it. This is real estate news you care about, and it's brought to you by IRA Title Pro. John, I don't know if you know this, but some folks use their IRA to buy and sell real estate. It's kind of a big deal. So if you're buying or selling real estate using your IRA, on your next real estate investment transaction, try IRA Title Pro. You know what's great? In our first show, we have sponsors too.
Okay.
If you can believe that.
It?
So with IRA Title Pro, you're going to enjoy a full-service title company that focuses exclusively on IRA real estate closings. You're going to enjoy faster closing times. You can close on average of 11 days faster. An experienced closing team that understands fractional IRA investments, a single point of contact throughout the whole closing, awesome proactive communication, and competitive closing fees. If you want to know more, visit iratitlepro.com. And with that, we want to be able to talk about real estate news that you care about. So we're literally just going to bring it up on the tube here. It's February 2022. Yes. I got to bring it up. I find it to be amazing. Like we're talking about this show, our great podcast, Building Equity Podcast. And I'm like, hey, I want you to be the Mel Gibson, the Riggs, and I'll be the Murtaugh. And then you're like, no, you want to be Murtaugh. And I'm thinking, who, and if you don't know this, this is a Lethal Weapon reference, Nobody picks the Danny Glover character, and I'm just fascinated that you would want to be Danny Glover.
I don't know what to tell you, James.
He carried a revolver, like a 6-shooter, I think is what he carried. And where Riggs was cool and he was, like SWAT and all this stuff, but
I didn't really watch any of those movies.
that's interesting. I thought we were better than that, to be perfectly honest. But listen, let's get into the news.
Let's do it.
Okay, this is
Jump
real
into
estate news you care about. And to me, the point of this segment is I want to be able to, I'm, as you are, I'm passionate and I'm obsessed with what's going on in the real estate market, whether it's prop tech, whether it's the price of lumber, whether I loved your fence story that I'm sure we can get into there as well. And it's February 2022. I'm pretty confident this show will be released sometime soon, but the news of today is inflation. And as of January, it came out, we were at 7.5%. So when we talk about here with inflation, this is Paul from Mortgage Reports. Paul Centopani, I apologize for butchering your name. Will inflation and rising rates cause a housing market crash? And this news here, John, I find to be so interesting because just basic economics, the way the Federal Reserve handles inflation, the only way to combat it is to increase interest rates. And if interest rates go up, what they say is that the property values will go down. It's going to put a halt on people buying, right?
And why is that?
And why is that? Because if interest rates go up, it's more expensive to get a loan, less people can qualify for the loan, and so forth, right?
Right.
Now, as of just last night, I read an article. What they're saying is that they were going to do these incremental rate increases, and we don't know what they're going to do, by the way. So I'm not saying they're going to do it. We believe, based on economics, that they will. They were supposed to, they advertised maybe a month and a half ago, they were going to do a quarter point. They may come right out of the gate with like a half a point, which is supposed to be like a drastic interest rate increase. See what happens.
Mm-hmm.
And what does that really mean to the market? Now, somebody told me, and I could be butchering this, but even though they did all the interest rate increases, it may have been the show that we end up having with Dustin, which is a forewarning here. He mentioned to me that there was like 16 interest rate increases between 2003 and 2004 or 2000, 2004 or something along those lines. And the real estate market went through the roof.
Yep.
So nobody knows what's going to happen, but it is the biggest news going on right now. So what do you think? Like, what happens in your world if all of a sudden interest rates go up and let's say the economy gets a little stagnant? What are investors doing?
Yeah, and I'm really glad that you pulled this article for this session, James, because I get this question frequently from investors because they're coming to me with the macroeconomic news, right?
Yep.
Inflation and how do we hedge against inflation and what should we do and what's going to happen in the stock market. And, people ask me all the time, I get phone calls from investors, clients, students, family members, and they say, well, John, you seem to know what's going on. What's going to happen?
Sure.
And my answer is I have no idea.
No clue.
I can't prognosticate the marketplace. Yep. And of course, here on the Building Equity podcast, we don't give advice or recommendations. Now, we do bring on attorneys, licensed attorneys, tax professionals, CPAs, licensed appraisers, licensed real estate brokers, right? But what we don't do is give advice, because what we're here to do is provide information and facts and then allow people to make decisions.
Sure.
And so as it relates to inflation and a lot of the macroeconomic news, what I always talk to investors about is, number one, do what you're passionate about. So this is there are 3 rules that I live my investing life by, and I try to help other investors and students of mine live their life by. So the first thing is you got to be passionate about what you're doing. Now, some people are incredibly passionate about landlording, incredibly passionate about buying and holding real estate.
Yep.
And I'll say that my wife and I are. And equally, we're passionate about private lending, being able to loan money to other rehabbers to finance their projects. And we're profitable as well. So we're able to take our retirement dollars and we're able to put them into Main Street instead of Wall Street. So that's what we're really passionate about. So that's number one, being passionate about what you're doing from an investment perspective. The second thing that I talk about with many investors is you have to be good at it, right? Now, that doesn't mean you're going to be incredibly proficient today. Maybe that means you need to get some more education. Maybe that means you need to continue to subscribe to our episodes here. Maybe that means you need to go to a weekend class or a seminar. Maybe that means you need to join your local RIA club, your local real estate investor club. There's a lot of things that you can do to get proficient.
How do you find a local real estate investment club?
Just do a simple internet search.
It's that
wherever
easy.
you're at, they're all across the country.
Right?
James, I've spoken at probably close to 200 of these local real estate investor associations or local real estate investor clubs.
That's why you're the legendary John Bowens.
I don't know about that. You know, the reality is, James, I'm just a regular guy, grew up in a blue-collared household. I still consider myself to be a blue-collar individual, and I'm out just like everybody else, buying properties, selling properties, making loans, and I've learned a ton along the way. Now, I will say I got to give credit to a lot of investors who are much older than me that have gone through investing all the way going back to the 80s and have taught me a ton. And that's what we hope to do on this show is teach people from the experience of other investors, the real world application like we talk about. So that's number 2 is either being proficient or starting to educate yourself to become proficient.
Yep.
The last is profitable. So again, from the top, you got to do something that you're passionate about from an investment perspective. You got to do something that you're proficient at, and you got to do something that's profitable. I will tell you from experience as a landlord investor, as a buy and hold investor, I can be very good at and very passionate at climbing under the sink and doing all the plumbing myself on a job that's going to take me 4 hours. Instead of paying someone, okay, I'm there doing the job myself. And I'm sure there's a lot of people out there that have done this before.
Absolutely.
The reality is, even though I'm very passionate about that and I'm very proficient at that, is that profitable? Now, some would say, well, John, you're saving, right? You don't have the expense to hire a plumber to go over there.
Sure.
On a job like that, it'll be all in materials or, call it $20. And then I don't really factor in paying myself, although I should, right? Yep. And instead, I could have paid a plumber to do that same job for $300. Now, some people will say, well, wait a second, John, that means you saved $270.
The opportunity cost is
exactly.
Yeah.
We have to factor in the opportunity cost. And I had to learn this lesson the hard way. So instead of Tuesday night being at the Real Estate Investor Club, networking with other investors, trying to find the next deal, instead I was huddled up underneath the sink trying to do the work myself just to save a couple dimes. I learned from a wise person a long time ago. I know you know this individual as well. Stop stepping over the dimes to get to the dollars.
Yep.
So again, that's kind of the first, call it tip that I'll give, all of our viewers out there, especially for those of you that are maybe just getting started. And the reality is for folks that are just getting started, that they might do some of the work themselves. Okay. And I'm not telling people.
It's a great way to learn and make mistakes, right?
Exactly. And I'm not telling people not to do that. But what I'm suggesting here is you get to a point where you need to start delegating tasks and you need to start looking at, where is your area of genius, focusing on that area of genius, and then delegating those other tasks to other people. And I'm sure we'll talk a lot more about that on future episodes.
We have so many real world stories, and we're not giving any investing advice as we've given the disclaimer. We're probably going to give that disclaimer every single episode, but we are really literally doing what we're talking about here. Right? I had 2 investment properties. I will never manage them again myself. I learned the hard way about I don't want to be in that spot where I'm getting those phone calls. And we'll have future episodes where we can talk about the property management and the pitfalls and so forth. But just prior to the news segment, I did ask you a question. And specifically, if I am what do you see that gets these, call it brand new real estate investors that were able to acquire the money, they've got the funds, whatever it may be, and we've got subscribers, I'd imagine, all over the country. You invest in Cleveland area, I invest in the state of Florida. I apologize, Jason, for touching my mic, but we're all over the country here, right? What do you see as this constant that gets folks to say, all right, I'm ready to do it. I'm going to take the first step. I'm going to go research the properties, and I'm going to do it, and I'm going to make an offer. And then maybe it gets accepted. What do you see is that that kind of, I don't know, I call it the constant that gets people to act.
Yeah. So what I see, James, and going back to your inflation discussion,
Yep.
and this is where I tell people, I didn't touch on this, but I tell people sometimes you're better off staying away from all that macro, if you will, economic, what's going on in the global economy. And
Sensationalism, right?
Exactly.
Yeah.
Instead, focus on your local market. Why are you listening to the national news? And don't get me wrong, sometimes that can give you some directional sense, but you should be talking to a local appraiser or a local real estate professional. Go to your local real estate investor club, find out from them what's happening in that specific market. Now, we're down here in Naples, Florida right now, and the Naples, Florida real estate market is different than the Cleveland, Ohio marketplace.
It couldn't be more different.
Absolutely.
Yep.
And so, people have to understand that you have to get down to the locality in your individual marketplace and start talking to real estate investors and tell them what you're looking for. And I can tell you, I have found many opportunities where just from talking to investors and telling them where I invest and how I invest, I've gotten leads. And in many cases, I get leads from people that aren't even asking for any type of assignment fee. They're not a wholesaler. They're turning me onto a property because we've built a relationship. I took them out to lunch. I paid for lunch. We talked about how we could invest potentially together in the future. Told them what I was looking to do. And lo and behold, I have a lead. I have an opportunity.
I don't want to cut you off here, but when you talk about like your local area, don't you feel like if you're just getting started and you have your local area, you're kind of limiting your risk because you know your street, right? You know who, I don't know in Cleveland, but down here we have county commissioners. You know where the growth may be in a particular area. You know that, hey, they're getting ready to build we had dinner last night in a kind of a business setting where there's, nightclubs and there's all these restaurants and all this stuff. You know that they're getting ready to build that maybe 10 miles away. So maybe a property that's a little bit close over there could be a great deal where they're going to want renters. Right? So you're limiting your risk. And that to me, when you say start local, you're limiting your risk, which I keep thinking about Robert Kiyosaki in the Rich Dad Poor Dad book. The more financial intelligence you gain, you're limiting your risk in whatever investment you decide to do. So sorry to cut you off there.
No, and the constant, you asked me about, what is that constant that you see across the country? Because I do work with investors in all 50 states in the self-directed IRA area of what I do. And what I find for the investors that are actively doing deals is they're not just looking for deals through one individual source. They're not just looking at the MLS for properties. They're looking for off-market real estate investment opportunities. And that's something that we can talk about in this show is, how do people market for off-market deals? And what does an off-market deal even mean? And where's the value? I know Dustin, who's going to be coming on, he talks about the value add. So he talks about how he finds properties. He talks about how he adds value. And then what's the after repair value? He builds his offer, makes his offer, adds value through rehab, and then sells for a profit, or maybe it's a buy and hold type transaction and he'll do a refinance. Some people call that the buy, renovate, rent, refinance, and repeat.
Burr.
Right. A lot of people call it the Burr method,
Yep.
which I think it's really neat that there's a lot of people talking about the Burr method and teaching on the Burr method. But the reality is it's not something that's new, right? It's not like it's something revolutionary. People have been doing this for, probably 100 years, right?
So the point here that I want to make sure that our brand new subscribers, brand new listeners, if you're catching this podcast, you're either listening in your car, you're watching on YouTube, click subscribe, right? But if you're brand new to real estate investing, we're an intermediate. What we're trying to bring here with the Building Equity podcast are these professionals, are topics that will help you make great decisions. We're trying to bring 10 years of title insurance experience. John, I got so many phone calls when I owned my title company about folks saying, I'm getting ready to make an offer on a tax deed sale or a bank-owned property. Will you just run a quick title search? Because I don't know if it's a good deal or bad deal. I've had hundreds and hundreds of those conversations with folks, right? We want to talk about the build for rent industry. We want to talk about where do you find off-market properties or probate properties or tax deed sales, or what does all this stuff even mean, off-market, MLS? We're going to dive into all of that here on the Building Equity podcast, right?
And James, the constant to finally get to that,
Thank you.
the constant is putting in hours into real estate and treating it like a business. And that doesn't mean it's full time. It doesn't mean you're taking away from time from your family. I know
Yep.
that's something you're incredibly passionate about, James. You have a beautiful family. You spend time with them.
Thank you.
And one of the missions that I understand that you had is you want to teach investors how to be able to spend time with their family and build wealth. And it doesn't mean they have to quit their job in order to do that. There's plenty of part-time investors out there that I work with, but the key is we do have to put work into it. And you talk about that. And we'll talk about how some of the activities that you can conduct on a weekly basis that can contribute to you finding your first investment opportunity.
So I'm not big on cliches. Like I love substantive information. And you'll probably hear me say that a lot as we go through this this upcoming season, because we got a big season planned with a lot of guests and we want to talk about things. But I want people to be able to, hey, go rewind, listen to this thing, because this is substantive stuff that you're not going to get anywhere else, that you can make actionable steps. But this is a cliche, I will say. When you talk about financial freedom, you know, this dream, I know what it's like when you're in the rat race. I know what it's like when you're pinching pennies. And I know what it's like when you're trying to make it. You want to be successful. You want to have a little extra money. And the problem with that chase when you're in that grind is you're not present with your family. And I know we've had this conversation. Like, my wife will be the first to tell you that, hey, James, you're sometimes very bad at being present. I'm there, but my brain is on other things, right? And when you're working to try to build retirement, that nest egg, that dream, right? Sometimes there's stress involved, but you can limit the stress by putting in the hours, right? So it's kind of a little bit of a cliche, but a little bit wrapping back to what you said. And what I want to be able to do is wrap up this first show. We got an amazing season planned. Click subscribe. But before we go, John Bowens loves his segments, and we've got another segment on this show.
History.
This is history. This is this day in real estate investing history. And what I feel like is, we've talked about some of the books we've read, a lot of the same authors. History repeats itself. So what's the best way to know what's going to happen in the future is to look what happened in history. So I'm very passionate about history. I'm a big fan of it. I'm going to force you to love it too, and I know you do. But this day in real estate investing history is brought to you by Equity Trust. Not sure if you heard of them, John.
Another sponsor?
It's another sponsor.
Another sponsor.
2 on our first show.
Okay.
Who knows? Unleash your inner real estate mogul. Discover your potential as an investor by maximizing the power and possibilities of buying and selling real estate with your retirement account. U.S. News calls them a top 7 IRA accounts for 2022. Investopedia says best overall self-directed IRA company with $34 billion in assets under custody. Start the conversation today at trustetc.com. And now let's talk history. This article right here is coming to us from, I'm going to butcher this. Hang on, let me zoom in to be able to see real quick. Okay, give me a second here.
Dallas Morning News.
Dallas Morning News from September 8th. 1929. Do you know why that's an important date, John Bowens?
Tell me why.
Okay, so in 1929, essentially they could say the start of the Great Depression. And the Great Depression started really in October. October 24th, 25th, 28th, 29th. You have your Black Thursday, Friday, Monday, Tuesday, all that stuff. So to me, what I find interesting is, like, what were they saying just prior? Just before the crash, just before it went down.
What were people predicting?
What were people predicting? What are they talking about? And this is an article here from the Dallas Morning News, and it talks about real estate wins favor of investors, right? What I love about this article is that even back in 1929, right, the people are learning to balance their investments, some stock, some bonds, and some real estate. Diversification, I think, is what we call it now, right?
That's correct. And I'm so glad you're bringing this history lesson up, because I have a lot of people that come to me and they want advice. And again, we don't give advice. I don't give advice.
Sure.
On, what is a diversified portfolio, and how much should I put into real estate versus how much should I put into stocks and fixed income and different types of, whether it's traditional stock market based investments or what we call alternative investments like real estate. And the reality is I can't tell someone what's right for them. They have to make that decision themselves.
Sure.
Here's a good example. So an investor that I've been working with for about 12 years now, her name's Jan. I've shared many stories about
Sure.
her and her family, and they use their self-directed IRAs to buy and sell real estate. They started off flipping houses with their self-directed Roth IRAs to build up capital, and now they're well capitalized in their retirement plans where they buy rentals. That cash flow flows back into their IRAs. They pay no tax. If they sell the properties, they pay 0% tax. And now they're actually giving back to the real estate investor community because there are younger up and coming rehabbers that they now work with, and they fund their transactions. So they make private loans.
They're giving them loans, yep.
To those investors. And because they've done rehabbing themselves, they feel a lot more confident in deploying their retirement capital into their local real estate investor marketplace, secured by real estate, okay, in a first lien position. I'm sure we can talk a lot about
Absolutely.
about that in the title business, right? That'll be for another episode. And so for Jan and her family, they're 100% invested in real estate because it's what they are incredibly passionate about.
Yep.
They are incredibly proficient with it, and they're very profitable. And then for them, they're able to give back to their church. They're able to give back to their community. They're able to take really good care of their tenants, what we call residents. That's another, call it pro tip. We don't call them tenants, we call them residents, right? And psychologically, it's a completely different scenario.
Absolutely.
And so we'll probably talk a lot about the psychology of investing throughout as well. Another real quick kind of tip for people. When you go to a house and you're going to make an offer, let's say it's a for sale by owner type transaction, one of the things that we do is we make sure to never box that person into their house. So instead of pulling into their driveway, we stay in the street and then we walk up the driveway. Because psychologically, that seller could actually be a little intimidated. If we're boxing them in, even though you think, well, wait a second, that doesn't really make any sense. It's the subconscious.
Wow.
So it's those little tips and nuggets that we can share. And by the way, these are all things that I didn't really come up with on my own. I learned them from other investors.
I literally started the Realtor Safety Program in my market, sat on the board for the Real Estate Association, the whole deal. And what I learned is that you never want to pull into the driveway. You always want your car pointed in a way that you can quickly exit the property in the event that something bad happens. So when you just said that, it triggered this thing in my mind. It's like, wow, psychologically, maybe it helps you get a better offer and maybe they accept your offer, but also you'll be safer. So just random note.
That's a great point. And James, we're going to wrap up here in a minute, but one thing that I want to mention to all investors is as far as this show is concerned and as far as you and I as investors and the people that we bring on the show and the people we vet before we even have them in front of our building equity subscribers, is that we are investors that not only are we making sure that we're focusing on our profitability, but also giving back to our community, being fair, making sure that we're doing things the right way and doing them ethically. So for example, we were having conversations around wholesaling. And nothing against wholesaling. I certainly think that there's opportunity there and you could do it the right way, but there's also a lot of people out there that are doing it the wrong way and they're doing it unethically. And so we want to talk about real estate investing and doing it ethically. And we go what we call beyond the return on investment. So for example, as landlord investors, in the pandemic, there were a lot of things that we were doing for our residents that went way above and beyond what we really needed to do. Now, there was an element of making sure that we were profitable. We needed to make sure that we get our rents, right? So maybe that meant bringing groceries over. Or Jan, who I was mentioning before, I thought this was really neat. And I picked this one up from her, and I'm going to definitely use this. And that is she put together little packages with little games and things, and she delivered them to her residents. She also, I heard just yesterday from BJ, he mentioned some of his clients, they do turkeys on Thanksgiving to their residents. And so it's things like that, maybe not even, we're not expecting something in return, but
we're a good person.
Right, but we're likely going to get something in return. And so, those are the types of things that we like to talk about on this program, is going beyond the return on investment and finding ways to do really great things in our community and being profitable at the same time.
Here's what I love. You and I sit down, right? And we have a significant amount of experience in the real estate world. You go to conferences, I go to conferences, people are calling us all the time for our opinions on what's going on in the market, right? We had a plan to sit down on the very first episode, the inaugural episode of the Building Equity podcast, and we're like, listen, let's do 30 minutes because people may not want to go long or whatnot. But you know what? People are getting a chance to listen in to you and I talk about something that we are very, very, very passionate about. So yes, we went a little bit long. We have an amazing season planned. And when I talk about that history news, about a diversified portfolio with real estate, the best part about real estate, doesn't matter what's going on with Russia and Ukraine. That's terrible, and we pray for everybody. But with real estate, you have the ability to kind of hedge the dollar in a way where you have the ability to make sure that people pay their rent. And when they do, you're getting that ROI. We are going to bring all of this to the table here and talk about what I think is just fun to have these conversations, right? In depth with somebody that's equally as passionate. So John, I'm so excited to go on this journey with you. Thank you again for doing this. And I hope that everybody that is either watching this first episode, write your questions in the comments below, because we have a team that'll look at those and we'll make sure we bring them up on the show. And then make sure that you also click subscribe and tune into the next couple episodes of the Building Equity podcast.
Awesome. Thank you, James. Looking forward to it.